Well, hello, everybody. Thanks for joining us. Buyers should be scared. Why should they be scared? We're going to go all over all of that this week. I've got a couple of reasons. The brewing of a perfect storm, really, in our real estate market here in Southern California. Let's get started. My name is Stephen Meade with Domicile real estate for people who love houses. We own a brokerage here in Southern California. We specialize in working with clients who are looking to make good real estate decisions. We do that by supplying data and perspective and help you make the best decisions possible. Let's talk about our market and why we are seeing the makings of a perfect storm starting to head our way. Going to go ahead and bring up our market statistics here. So let's go ahead and talk about this for a second. We're going to start off here just talking about our active listings, right? These are the listings that are active and available on our market. And I want you to notice we do see a little bit of a number improving here. Do not be led astray. This is very common at the beginning part of the year. I also want you to focus, though, look at where we are versus last year. Under $1 million here in LA and Orange counties. We are drastically lower than we were at last year. And even here, as far as our $1 to $2 million price range, that is trading even and possibly a little bit down from last year as well. So we are still in an inventory market that is already lower than what was a low inventory market. That is condition number one. Now, here we have something that's interesting. This is new listings that have come on the market in the last 14 days. Obviously, this is a big jump. If you look at these hockey sticks, one thing about hockey sticks, they are rarely sustainable. And if you look here, I mean, look at the depth that new listings dropped towards the end of the year. That is perfectly normal. Nobody wants to put their home on the market the last 2 weeks of the year. So I really think all we're doing is just kind of making up. This is just people, that rush of homes coming onto the market that first 2 weeks of the year. This will be short-lived. I can nearly promise you that. Moving on to our new escrows. This is the one that is a little bit more important. We saw things dwindle towards the end of the year, but this has also shot up. The number of inquiries we have had from people saying, this is going to be my year to buy a house, that alone should tell you that we are seeing a big kind of groundswell of demand that's kind of been missing, right? I think there's a lot of people who gave up the last half of last year. I think those people are all coming back in the marketplace. And the problem is, I don't think we are going to have enough houses for those people. If you look here at our absorption rate, again, do not be fooled by this. Look at what happened last year. This is the same thing. We see this rush of new listings in that first 2 weeks of the year, but it is not short-lived. I think what you're going to start to see is you're going to see that absorption rate is going to even out, and it's going to even out towards this 90% mark. We'll have to wait and see in 2 weeks. And if you look at our closed prices, remember, closed prices are based on where the market was 6 weeks ago. This does not really incorporate a lot of the interest rate information that has come in the last 6 weeks. That's really what is driving this huge jump in demand that we are seeing actually out in the marketplace. Remember, the process for a buyer is interesting. Just because they suddenly buy a house, that does not immediately turn into escrows. Those buyers have to get pre-approved. Those buyers have to look at houses. Those buyers have to write offers on houses. So I think we're seeing a little bit of a trailing effect, and you're going to see that start to affect our numbers on our next cycle. If we look at our still active percent, this one is very, very interesting. Normally, this number jumps at the end of the year. Guess what it did not do this year? In 2023, it did not really jump at the end there. It stayed steady. Look versus last year. Another sign that 2024 is going to be different than 2023. Finally, we've got our list to close ratio. This is still over 100% for both our under $1 million and our $1 to $2 million category. What does that tell us? Well, it tells us that buyers value the properties more highly than sellers. And whenever that happens, that also leaves you in a position where you are poised for price increases to occur. It's kind of like the conditions are right for those price increases. If we look at our days on market for new contracts, these numbers are both well below where they were at last year and heading lower rather dramatically. This data is more up to date. This is based on homes that have gone into escrow in the last 2 weeks. We've got to remember to separate between this older data, closed prices, and more current data, days on market for new contracts. You can see the trend, the shift, what is happening. Finally, we have our three-way chart. And look at our three-way chart. Was there a slight little bounce maybe a week ago in interest rates? Yes, a tiny one. They've already started to head back down again. We are seeing FHA rates under 6%, believe it or not. If you look at this gap, in fact, this gap is almost narrowing. If these come back here to the 6% rate, that means our gap versus our payment and rent index will be within this 20% margin. That indicates a very, very hot market when that happens. That leaves room for prices and payments to go up. Another reason why buyers should be scared at what they are facing. And finally, we've got the obvious, our prevailing mortgage rates. They jumped up, peaked, fell down rather dramatically. We've actually seen in the last couple of days a few small reductions as well. So what does this mean if you are a buyer, a seller, or a combination buyer and seller? Well, let's go ahead and start with the buyers first. Do not wait. There is very little upside for you by waiting. Obviously, your situation is individual. If you are facing a job change, big job promotion, increase in pay, those things can all factor into your decision. But if you are making a purely market-based decision, there is a very low chance that you will be better off 90 days from now than you are today. I think this spring is going to be a very hot spring. I think it is going to be land of multiple bidding. I think there's going to be a lot of scrambling. And I think there might be people doing the thing which I hate, which is basically settling for a terrible house because it's all they could get. I hate to see it when buyers do that in the marketplace. But the flip side of this is I think there are opportunities, right? If you look at the three things that a buyer wants, right? They want the right house, the right price, and the right rate. I think you might not be happy with the right price at the moment, but the right rate is rapidly approaching, and the right house is something you do have some control over. Now, what about if you're a seller? Well, if you're a seller, things are a little bit different for you. You need to be smart. This means paying attention to local market conditions. And when I say local, I mean hyper-local, your neighborhood, your price range, your property type. If there are no homes for sale in your neighborhood or area that are remotely similar, it is a good time to put your house in the market. There are buyers out there who are looking. Conversely, if you're the fifth similar home in your neighborhood to go up and hit the market, not a great time. Be smart if you're a seller. And if you're a buyer and a seller, well, things are a little bit trickier for you. On one hand, you're going to probably do very well when you put your existing home up for sale on the market. The opposite side is you're going to find it increasingly difficult to get offers accepted. We are rapidly approaching a period where I think it will be difficult to be a contingent buyer, meaning you are buying a house contingent upon selling yours. I think we're going to start to see those longer rent backs come back, meaning you put your home up for sale. The buyers give you a certain amount of time where you're allowed to stay in that house while you look for your next house with cash in your pocket. That's what I think we're going to see here for sellers. Thanks so much for watching. Know we went fast today, trying to give you up-to-the-minute information as quickly as possible. Once again, if you are looking to buy or sell in Southern California and you'd love to work with us, we would love to work with you too. Don't hesitate to reach out, like, subscribe, hit that notification bell, and as always, questions and comments, we do love them. We will see you again real soon.